Martin, do you make monthly payments on margin, or how does that portion work? A question here just coming in from one of my members, Salty Biscuit. Being a member allows you all sorts of little bonuses like this. If you ask me a question, I will make a video out of it. This is being made during a live broadcast. So tap the like button and consider subscribing. So let me answer that question. He's asking, do I pay monthly payments on margin, or how does it work? Well, first of all, if you want a full explanation, a 30-minute video on margin, go and check out my margin call video. Very, very important. This explains everything you need to know about margin. I will put that video below in the description, and I'll also put it above my head. So go and check out that full video. But essentially, to answer your question, Salty Biscuit, margin, you don't look at margin like a bank loan. A bank loan, they give you some money, you go out and spend it, you haven't got it anymore, and you agree to pay X amount every month for so many years until it's paid off. That's how it works. And you can, of course, overpay, or you could, pay it off early. Margin is different. What margin allow you to do is they don't give you any money. Your balance doesn't go up by 10,000, 20,000, 30,000. What goes up is the gains or the losses going down on the stocks that you have bought with their money. So you have used the brokerage's money to buy shares with. That's it. So you gain on the benefit going up, and you lose if it goes down, okay? But your balance hasn't gone up. You've not suddenly borrowed $10,000. You've bought $10,000 worth of shares, and all that shows is the gain or the loss. There's no change to your balance, but you now owe that $10,000. Now, unlike a bank loan, the way it works is you go into margin when you've got no cash in your buying power. You've used all the buying power, then you go into margin. You can't use margin while keeping cash in your balance. It's impossible. People have often said, well, can I keep cash and earn 5% and use margin and pay 5%? No, because basically now you'd be getting margin for free. It wouldn't work like that. If it worked like that, I would buy $1 billion worth of stocks. I'd buy every share there was, right? It doesn't work that way. So your cash is gone. You're now going into margin. So essentially, your buying power is negative. My buying power, if you look at it now, is $100,000, and I've used $20,000 of margin. I have no cash. Cash is gone. I've got margin at 20,000. If you look at my details here, it tells you, this is my real account, my real money, of course. It tells you that I'm paying 6.75% interest, and my daily interest is $3.41. $3.41. That's what I'm being charged per day. Now, what they do is they will charge me at the end of the month for every day, how much it all adds up to. That's what will get dumped onto my buying power. So my buying power, let's say it's $100 interest payment, will go down by another $100. So bear that in mind. You're now paying interest on the interest. Make sense? That's where margin is very, got to calculate all of that. So that's what happens. So as far as paying off the margin, every time I add cash, the margin gets a bit less. My daily payments get less. If I get dividends come in. If I don't have auto invest the dividends will come into my buying power, the cash, if you like. The margin will go down. The buying power will go up. I'm heading back up to zero. Make sense? If I sell some stocks, the buying power will go up. The margin will go down. That buying power will go up towards zero. Make sense? That's how it works. So you don't pay a monthly payment every time you receive money, whether it's they pay me interest, or they pay me the 1% uninvest in the 1% match. Today I earned, I think, 85 cents. That went in reducing my margin. In a couple of days' time, tomorrow, I'll get paid $431 dividends. It's not set to auto invest. It'll reduce my margin. My margin will go down. My buying power will go up, heading towards zero. When I get paid on July the 21st and I add some money to my brokerage account, my margin will go down and my buying power will go up, and I'll be heading up towards zero. So that's how it works. I could clear all of my margin right now by simply selling $20,000 of the S&P, and my balance would not change. I would still be at $101,093. I wouldn't go up or down, but I'd have no margin, and my $3.66 or whatever it was would stop. So I'd be better off by $3.66. So why don't I do it? Well, first of all, I would pay tax on that money if I sold, and I don't want to sell. I've now not got those shares, which are not going to earn me dividend payments for the next 20, 30 years. So that would stop. I'd have to buy them back at a higher price, so I don't want to do that. So it doesn't make any sense. And if I look at my account today, I'm up by 165, which is a lot more than $3.66. It's worth me being in margin, as I'm earning more from the growth than I am from the interest payments. So that was a very long way of explaining it, but hopefully I gave you all the context to it. Martyn, do you make monthly payments on margin, or how does that portion work? That's how it works. You pay it off as you go, whenever you want. You could never pay margin off if you wanted to. That's what a lot of people do. Some people leave their money in margin all the time, and there's a good reason to do that. And let me show you why. Let me make this screen a bit clearer. If I make it, there you go. Right, so this is why some people leave it in margin permanently. As you can see, I'm currently paying 6.75%. Now, if I have $50,000, I'm paying 6.5%. At the moment, my first $2,000 is free. Select gold customers have that at the moment. That's going away in August the 18th. Hopefully, they'll do another promotion. But anyway, 6.75. Well, if I'm earning 13%, if I'm earning 13% a year on the stock market and it's costing me 6, I'm better off. I'm better off. Now, my cash, my money, the stocks that I own, they're earning the full 13, right? But the money I borrowed, it's money I don't have. I can't buy those shares. It's making me 13% to pay 6. I'm still better off by 6, right? You might go, well, why don't you just wait until you've saved up the money? Well, you could do that, but if you waited, you've missed out on those 6% gains. You've not got that money to buy it. And if you wait, of course, you've missed it. You might as well just borrow the money, because it's cheaper to borrow the money. You're making more money. But as you can see, as if I increase the amount of margin, and this is why some businesses, big people, big investors, keep their money in margin. If I put 50 million in Robinhood, they're going to charge me 5.7, a whole percent and 5 down less than they are at 50,000. So that encourages you to put more money in and use more margin if you like, but nothing wrong with that, because bearing in mind, in September, I believe the rates are going to come down, and 5.7 could come down to 3.7, and you're making 13%, so you're making just about 10% by having your stocks in margin. That's the point of margin. Okay, so I hope that answered all your questions. I went through all my ins and outs of my account, and there it was. I answered that for one of my members. So I hope that helps. Click above my head, down below in the description. I'll give you the links to the full margin video. Go and check that out. Also down here. I'll also put it up here, and I'll put my alpha spread, my full playlist of all the stocks I reviewed down here. Until next time, as always, take care of yourselves and each other.